Hello, good day, guys. My name is Nick, technical analyst with SuperForex, and today we're looking at the analysis on the currency pair GBP JPY. And first, we'll be talking about much required fundamental analysis following these setups, and then we move down to technical views, overview of everything, which will be purely what we'll be seeing on the chart. Now, today GBP JPY fades as the UK Japan interest rates are really expecting to converge, while in the UK, some falling inflation is expected to lead to lower interest rates, while in Japan, rising inflation is increasingly expected to lead to higher interest rates. Now, we have GBP JPY trading 0.1% lower on Friday at just above 191.00 as converging UK Japan interest rate expectations reduce the advantage for investors of holding the pound sterling over the Japanese yen, weighing on the exchange rate. Now, easing inflation expectations in the UK have led investors to speculate that the Bank of England (BOE) will cut interest rates in June, and this has, of course, weakened the pound sterling since lower interest rates has tended to reduce foreign capital inflows. Conversely, in Japan, the Bank of Japan increased rates from an extraordinarily low negative 0.1% level at the bank's March meeting. And that move had, of course, had many investors speculating as to whether the increase was a one-off or the start of a cycle of rate hikes that could strengthen the yen over the longer run. Now, in a recent interview with Asahi Shimbun, we have the Bank of Japan Governor Ueda seem to suggest more interest rate hikes, which could be down the road given accelerating inflation. Of course, Ueda said the positive results of the Shanto spring wage negotiations will be reflected in wages through the summer and then also reflected in the higher consumer prices later in the year. Given an annual wage talk outcome so far, we have trend inflation, which is likely to gradually accelerate, being the case. Now, also, we've seen that some survey might show that the UK inflation, cooling because the latest Bank of England decision maker panel DMP survey for February showed that most firms see selling prices and wage inflation cooling over the next year. And according to DMP survey, we have selling price expectations decelerated to 4.1% from 4.3%, the lowest reading in over 2 years. Wage growth expectations softened to 4.9% on a 3-month moving average basis from 5.2% in February. Now, expecting this, we are expecting a real drop, probably from the upside or a continuation to the upward trend, if possibly a full breakout from this with a very important Mariposa candle should shoot up from this position. We'll be expecting a new zone on the 193 axis, also probably extending to the 194 axis. And that's our technical analysis on today's currency pair GBP JPY. Now let's move over to the stock market. Hi, welcome back, guys. And on today's stock market, we're having a look at Coca-Cola. Recently, we've seen that Morgan Stanley adjusted its outlook on Coca-Cola. Euro-Pacific partners, Coca-Cola have been increasing the stock price target for EUR65 from the previous EUR60. The firm has maintained an equal weight rating on this stock. Now, the adjustment reflects that Morgan Stanley's recognition of Coca-Cola's Euro-Pacific partners' sustained operational momentum within Europe. Now, additionally, the firm anticipates improved outcomes from the company's acquisition in the Philippines and long-term enhancements in Indonesia. Now, Coca-Cola Euro-Pacific partners have been focusing on expanding its market reach and operational efficiency, while the recent acquisition in the Philippines is part of the company's strategy to bolster its presence in the Asia-Pacific region. Now, this, of course, we are expecting the new stock price target at EUR65 suggests that Morgan Stanley sees potential for some growth in the company's stock value based on the current and expected performance in its various markets. Investors and market watchers often look to such updates from financial institutions as indicators of our company's health and potential for some future performance. Now, the equal weight rating implies that Morgan Stanley believes that Coca-Cola Euro-Pacific Partners stock is valued appropriately in relation to its earnings growth and risk profile. Now, we are expecting, technically, we're expecting a push up to a new zone following this improvement. We are currently expecting at least moving up to the 60 zone, which has been the stock market has been quite gradually declining ever since and has been on a halt at the range of the 58, 59.64 zones. But now we're expecting with the latest improvements, we should be looking out for the 60 zones, and additionally possibly might be heading to the latest and the highest resistance at the 61.26 zones. And that's our technical analysis on today's stock market, Coca-Cola. I remain your host, Nick. Bye for now.